Okay. So basically how this things works out is psychology means you can have there is a there is a psychic factor. If someone is losing his patience and someone is losing his inner ability, is not having the mind is controlling yourself. If your mind is controlling you, that means that you are lost. Your inner mind is controlling you, and itself you're lost. That means that you have definitely a psychic problem. Okay. So same thing here. Yeah, you need to have two kind of a psychology. First thing is you need to understand yourself first, and before getting into the other person's shoes, right? So first thing is I need to address myself on my psychology, right? How can I address myself on a psychology? Let me and if you're not speaking, please mute yourself. Okay. Okay, so you need to understand yourself how you can cope up with this kind of a pressure. There are different kind of a pressure has been inserted to every person, right? If a person is buying something, let's say if you are a person and you're trying to buy a product. Let's say you're buying a product, and a person like salesman, right? When he comes near to you and he try to convince you, and if he convince you and make a sale, right, that means that you lost your inner self. You would have done lots of researches, you would have done lots of thing about a product, and when you go there and you sit ask for that particular product, and the salesman says that sorry, don't take that product, in fact this is better, then what happens? You tends to go into his thing and you will buy it definitely. What happens to your research? What happened? You spend at least one day like that. You spend one day in the market, and you on Saturday, Sunday you sit and you do all kind of researches and everything. And then when you try to enter into the market on Monday, okay, and someone tells you that is not good, buy this, will you buy yourself or you buy someone else, right? So in that case, you are you are not following the footsteps of your mind. You're not controlling your mind. The mind will tends to accept. It always tell you that you are wrong. Always it will tell you that you are not in the correct analysis. Even though if you do lots of analysis, your mind will tend to go to another person's perspective, and it will accept that. If you accept that, right, you are lost your thing completely. First thing is you need to know that first. Whenever see, in trading in stock market is not that simple. Okay, the person who has strong fundamental skills, a strong technical analyst, if he lacks psychology, he is gone. How the psychology works is, let's say I'm a person. Okay, I'm a technical analyst. So I buy a product. Let's say I buy a script that I think that that particular script will be keep on moving on the IS side. Let me think that I am buying, let's say I'm buying LTT, or let me say I buy Cipla because Cipla is a failure. Let me say I'm buying a Cipla around 984. Okay, and I'm thinking that this script will be going for 1050. Okay, so as per my analysis and everything, it tends to go for a ISI. So what happens at from 980 it went up to 990. People did not buy it around that particular area. 980 to 990 people did not buy it. And when it crosses under 1000, people tends to believe that whatever the call which I gave at 980 will be still going for 1050, right? And people will try to jump in around $1,000, and then they will try to buy it for 1050. In fact, they lost 20 rupees out, and then they're trying for a 50 rupees on the other side. That means that you're risking 20 rupees more on my stop loss. That means that I would have had a stop loss at 947 and I would have given you a stock at 984. But you would have taken a stock at 100 rupees, 1000 rupees, and where will be your stop loss? You will be again shifting to 947. No, right? So that is a problem. So we need to have a see, even though a technical, I know that this will go up, but still I have a backing factor like stop loss. So I will respect my stop loss, right? Because I'm expecting around 70 rupees up. I have a stop loss of 35 rupees down. But if you have a 50-50, not 50 and then 67 down, it's not good. So in fact, as a psychology, even if a script is going down, you should see that even if a technical analyst, even if some big shots telling you that buy a script and then there is a stop loss attached to it, if you miss the script at the right entry, you should not get into the script at all. Even though, let's say I'm asking you to buy LTTI at let's say 4,300 rupees. So you did not buy it at 4,300 rupees. When it comes to 4,400, oh shit, I missed that entry. I should have got it. But when you enter at 4,400, you will be risking more and more than 100 rupees than me, because I would have taken an entry at 4,300 for a bigger target. You would have taken an entry at 4,400 for the same target, but whatever the stop loss which I have will be smaller than your stop loss. If my stop loss hit, it will be 2,000 bucks. Which will be your side will be 1,500 plus 2,000, something like 17,000 bucks, right? This is what major contributor is all about. If someone is telling you to buy something, you should buy at the right time. How the people work is, people mindset is they tend to believe, they will not first itself, they will not believe. Okay, let's say there are different kinds of people. Okay, there are different kinds of people. One accept blindly, one will see how it works, and third one is first let it go, yeah, then I'll buy it. Okay, the first guy, when someone tells you, they'll blindly go and buy it, and then he will be seeing what is coming out. The second guy will sit and he will be watching, and the third guy will always end up in loss because he will not buy at the right time. He will be buying when the stock is moved. Okay, the first point that you need to do is, whenever you find a call, if you miss the entry, if you miss the right entry, if you miss the right timing of the entry, please avoid. If a stock moves by 2% or 3% or 4% or 5%, never run behind that same script again. Because if it goes up and then people tell you that you can buy it at VWAP, right? Don't do that. That means that you are expecting more into it, right? When see, there are so much of logic behind it. It may come for the VWAP and it can get a support at VWAP and then it can go up. That is definite issue. If you're talking about psychology factor, when it missed, it has missed. Okay, and then second thing is, if you're buying something, you should have a stop loss, and then you should respect your stop loss. Add a chode, yaar, I can hold it for, because I had a profit at 10,000 rupees in previous script, so I can hold for another 10,000 rupees from the script. Will you do that? No, I cannot do that, right? If I do that, that means that in one script I'm getting 20,000 rupees, another script I will be losing 40,000 rupees. And then what happens? You'll do over trading. And second thing that you need to bind in day trading is, you should not do over trading. You should have a particular day how much profit that you are expecting, the same amount that you should risk on a particular day. You should not have more number of losses. Let's say I'm expecting 10,000 rupees per day. I don't want more than 10,000 rupees per day, right? I don't want more than 10,000 rupees per day. So if I do a trade and then if I end up at 1,000 rupees, 10,000 rupees on a particular day, you should close your thing and then you have to go and spend with your family. And same thing, if you lose 10,000 rupees, close the terminal and go and work with your family. What it does is, now if you practice this, you are controlling your mind. If you control your mind, you will control your trade. If you control your trade, you will be always end up in cumulative profits. When you do a cumulative profit, one fine day it will be a huge amount will be lying in your capital. When it's a huge amount in the capital, what you have to do? You have to withdraw from the capital. Okay, it is like the cycle that you need to follow. If you the mind is the killing factor for everything. So even though let's say something here, let's say this is a perfect trade, right? Let's say this is a nifty, bank nifty is going down, right? Let's say this is a bank nifty and you are a technical analyst, right? If you are a technical analyst, what you will do is after breaking this eye of it, right, you'll be taking a jumping into this trade. But after jumping into this trade, do you think that this will sustain? If you think that you had made a law, you made a wrong entry, you should accept your wrong and you need to come out of the trade. You should not holding the trade. Even though if someone gives you a stop loss of 4 rupees, 5 rupees, you should see inner into it. Like let's say someone tells you 10 rupees stop loss, you should see whether I can have a lesser stop loss than what the people are giving. You are all technical analysts, guys. If you are a technical analyst, you should also think how you can make it better. How you can make it better? Okay, I didn't share my screen. Sorry, I'm really sorry. So this is can you see my screen now? Is my screen visible? I'm sorry, I didn't share it. I didn't talk about anything without the scanning. Okay, so this is what I'm just now starting. Let's say this is Bank Nifty, and then I'm taking, let's say this is on a breakout. Let's say this is on a breakout. So I'm taking a, let's say I'm taking a breakout trade, and then you see a selling is coming back. So what you have to do, you are taking a breakout from this candle, right? If you are a perfect trader, you would have exited your trade around this area, right? So if you're not accepting this loss, you should have accepted the loss around this area. If you're not accepting the loss around this area, you should have accepted your loss around the range of the market area. If you're not accepting the loss around this, then something is wrong with you. Something is wrong with you. Definitely something is wrong with you. You may be pressurized. I can say you may be pressurized with your something. There may be a family issue may be going on. There may be back of your mind your excess of losses that you made in the market, and you are praying to your God that can you make it up, and you're running behind the other person's shoes getting the call addressed, and see what can I do for that. All these things comes up. First thing is you need to believe in yourself. When you buy, let's take as an example, if someone is planning to open a shop, let's say he's planning to open a shop, and he invested something around 10 lakhs rupees into the shop. Okay, and he invested on the first and invested everything, all the interiors, everything is that they did for the first month, and then he expecting a very good entry into it. So people entered, as it is very new, people entered everyone like into the script, and then they buy everything, and you got a estimation of 1 month how much return that this particular company is giving you. and then you will see the break even and see how much profit that you have in the company, right? Second month going, you don't have that much of expectation. It's coming up, like let's say you are expecting the same break even or the same amount of expectation from the first month, but in turn you are getting a loss of around the same percent of what you get in the first month, and then it is on the break even. Okay, and the third month you're looking into it and you're seeing that there is a 10% drop in your capital. So what action that you will do take? Will you close your business, or you will revamp your business, or you will see that why the problem is occurring, or you will shift to another one? there are you need to study your thing, right? You need to study your way of approach. You see, first thing is you started the business correctly, and then it went on the first day, on the first month you got a profit, and then the second month you didn't receive the same profits, and the third month again your loss of 10%. What may be the reason? You should understand what is the reason behind it. Is my selection, is my the product that I kept in my shop is worth so that people come to buy, or is the brand that I have that was pulling my ding on the first month, and then what happened to the second month? Maybe I got it on the discounted price and then I gave it on the second month. I raised the price so that it is not coming up. All these things you can analyze, right? And then third month, even though if you do something on the business and you tend to see that there is a drop in the business, will you hold your business for next 30% down, 40% down in the market? No, no. At least you will accept the loss and you will be winding up a business so that it doesn't even cost you more than your capital, right? So those kind of mindset that you should have it in your day-to-day activity. Like in stock market, you cannot have the same mindset. So let me take it. Okay, let me take a option call and I'll buy it. Like I have 1 lakh rupees, I'll let me buy for 1 lakh at all, and I want to buy all the nifty and bank nifty options at 1 lakh. I want to buy everything and I want to become a crorepati in a single day. Okay, the first day from 1 lakh, it is giving you a loss of around 20,000 rupees. What you should do? You should hold, right? Or you should exit. People will hold it. Why? Because they think that we may get a profit of around more than whatever things that we have. And the second day, you got another loss of 20%. So now 40% loss from the 1 lakh rupees. So you have 60,000 is left in the options. And then third day, another 25% is lost. So now how much money he is having? 35,000 money in his hand. And if he still holds that 35,000 rupees, okay, it'll be soon become zero, right? So what that person should have done, when it is of 20% loss, that person should have exited from the market. He should not accept, you should not be greed, or there is no greediness here. There is no greed. You may think that he is a greedy person. No, he is not a greedy person. He may be thinking of closing their loans and something. I want to live my happily. I want to live my life from the losses that I initially made. I would have made something around 25 lakhs to 30 lakhs in the past. I should take the 25,000 or 25 lakhs, 30 lakhs in a single instance so that I can be happily in the rest of the year. He may be thinking of that. He may not be the person. I want to be a Kodishwaran, I want to earn crores and crores of money in the stock market. No, I think those kind of guys are not there in the market, right? We people are mostly on the selling side. We are all already we are in so much of losses in the market. So we need to get something out of from the market, right? We cannot have the same feeling. I lost it. I lost everything in the market. What should I do? I should put some more money into the market. See, if someone is on the failure mode, he has to step back and he has to analyze what his mistakes are. He has to correct it first, and then he has to enter it on the right time, not again when he's on a failure mode. He should not step into the business again and again and again and again, because when he steps in first failure, second failure, third failure, his mind will not work. When his mind doesn't work, whatever trade that you do will always end up in loss. Even though if you are a strong technical analyst, you will tend to make mistakes. Mistakes are not mistakes. The chart will tell you to exit, but you will not be in a position to exit because you had only 10,000 rupees and you made an entry and you have made a loss of 2,000 rupees here, and then if you exit you have only 8,000 rupees. So let it come back so that I will recover that 8,000 rupees alone, at least that 10,000 rupees alone, right? But what happens here is if it goes down, people will not tend to sell it. They will be holding it because they were expecting it, they want to move up. So they will not be changing their mind at all. Their minds are completely blocked. Okay. If you want to come out of all this stuff, right? All this messes, one thing that you need to have is a complete peaceful mindset into the market. If you're coming to the market, you should not be doing any other work. If you're doing any other work apart from the stock market, please stop stock market. You should not be holding two position at the same time, because two position is different. Stock market is different. Stock market every minute is paisa, and other work if you not do also, it'll automatically it goes out. Okay. But in stock market, every second, every minute is all paisa involved. It's all your hard earned paisa is involved. So when you're involved into the stock market, your mind should be clean. It should be fully concentratable on the market itself. If you are concentrating on the market alone, there is no disturbances from outside. You're not interfering into other shoes. You're not looking into others kind of a stuff. You're looking only in the market. You're looking only in the chart, and then you are taking the trade, and no i5 fundas, no i5 videos, no i5 anything. You're concentrating on the market. You're watching the terminal. You're watching the chart. You are taking the own decision. You are taking the trade. And then when it's set for sell, you are doing the sell. If you follow that, all the things will come in your right place. All these things are all talking about your inner psychology. First, I'm talking about your inner psychology. What are the things that you should do first for understanding the other psychology, right? First thing is you need to have your control over mindset. That's what I'm saying. That means that you should have a positive environment. You should have a positive environment first. And second thing, always keep a positivity around you. Why positivity around you is, even if someone tells you what you will earn in the market, yeah, please leave the market, you will not earn anything. First, take away from them. Have a positive mindset. Always have a positive mindset. No, you should have a positive mindset always. You cannot have a negative mindset surrounded by you always. Okay. So, and one more thing, people may be interested in different kind of strategy today. Okay, there are strategies available for psychology too. Okay, there are psychology available in psychology too when we discuss about the other factors. Like, let me, when we talk about the other factor, when we talk about other factor, not your internal factor, when we read the other person's psychology, we get into the trade beautifully. So that is also there. Okay, that is also there. We're not going to touch it as of now. We'll be touching that too. Okay, so first and foremost is keeping our environment clean first. So when our environment is clean and then all the mindsets are clean, my everything's are clean, and then I don't have issue with my money, I don't have issue with my risk capacity, I don't have anything from my family, I have no commitments from the family, my money is lying idle. Those guys will be earning a lot of money. But what happens to the others who are committed? Like, say I have a personal commitment, I have this money from the salary, and this is what the money is. I have committed for the EMI that I need to pay, that I have to commit for my children's study, and then I need to commit for the entire thing for the study. And then when you put that money into the market, you will have fear. The fear factor will kill you your entire stuff. Fear factor is the worst factor in anything. If you take a trade, you should not have any fear running behind you. You should not have a second thought. Why you should not have a second thought is, if you take a trade, that trade should be your positive trade, and that trade should be a accurate trade, and that share should be your profitable trade. Okay, if you think that that is not a profitable trade, you should accept your mistakes and you have to come out of the trade. How this can be done? You need to have acceptance, acceptance of your failure. If you accept your failure, everything will come automatically. Let's take an example. Okay, I do the first trade. Let's say I'm doing a first trade, and I'm giving you a target of 100 rupees, and you buy the shares, and you exited at 5 rupees, 6 rupees profit, and then you exited. And next trade you are entering, and I gave a target of 40 rupees, and you are entering it, and then you are taking a profit of 4 rupees, 5 rupees. And then third trade you are entering, I gave a target of 25 rupees or 30 rupees. You are taking the trade, and then you are exiting around 6 rupees, 7 rupees. Total how many profit that you made? Three profits. Okay, three or four profits that you made, right? And the fifth share which I'm giving, I gave a target of 150 rupees. Okay, and a stop loss of around 70 rupees. All double, 1:2 is the profit. Okay, and the market goes down. Market, I cannot run the market, right? I'm not the person who is running the market, and no one in this world is running the market. It runs automatically. It has been run by the entire world. People, anyone from the America can come and attack us, or anything can happen, right? We cannot be the person in accepting those things, right? These are the factors, these are X factors, those are X factors which cannot be predicted or nothing. So what happened, that guy had us three six profit, let's say four profits he had, and then he is taking the fifth trade, and then he took the entire profit of, and then he took it, and then it's a stop loss of 70 rupees. So with the 70 rupees, what happens is, whatever the three profit that he made, the one loss would have wiped out everything, and then he'll be starting the day again. If he starts the day again, right, what happens? He tends to put more, and then he'll be looking out for more trades. Whom you are giving business to the brokers or for you? You are in fact doing good to your broker, and in fact you're doing worse for you, right? If you think that there is a possibility of moving up, try to hold on the shares. If you think that there is a possibility of moving down with this buying shares, try to exit as early as possible. Okay, whenever you buy a share, it has to move up. If it goes down 3 rupees, 4 rupees, and it has to recover the stock another 5 6 minutes time, or it has to go by another to the buying level for next 5 to 10 minutes. If it's not happening, then please exit it. Okay, there may be some kind of a problem with the particular shares. Okay, people have lots of mindset. Yeah, lots of mindsets, whether to take this trade, whether not to take this trade, whether take to the trade, whether not to take the trade. Sir, I have taken this trade, sir. What should I do? Who? How did you take this trade? So I saw it is on a breakout, sir. It is on the moving average. It is getting breakout, and I see there is a 52 weeks high, and it is going for a breakout. So I bought it, sir. So you took the entry, right? You took the entry, and you had the analysis. You did the all analysis. But when it goes down, why are you seeking other person's interference? That means that your knowledge on that particular subject is there. You did it correctly. Breaking breakout, you're taking the trade. 52 weeks yeah, high, you're taking a trade. But what is stopping you? Why are you not doing the other factors into it? What are the other factors? Why it is going down? It has to go up. Why it is going down? Is something really happened in the stock? Is it a false breakout that has happened? It's not a false breakout. Whether it's something like uh, there's no support from the higher side. People are selling it from the higher side. How many lots have been sold? Everything you will look, na? If it's on the opposite side, will you hold it? No, you should not hold. See, basically, whenever someone is teaching you, right? Whenever they teach you on a breakout, they will be looking out for the stop around this area. They will not have stop around this area or this area, right? So you should also follow the same. Why we need a stop loss here? Why we need a stop loss around this area? These are all the mindset that we really missing out. These are the factors that we really missing out. So let's say there is a person who's telling you, sir, it is on a say it is on RSI, sir. It's RSI is 75, sir. MACD is all positive, sir. MACD is positive. RSI is positive. Everything is positive, sir. What will you do? Positive means what? Sir, it is on 65%, sir. So, so 65% means what? It has to go for a higher side? No, sir. It will come down, sir. Why? Because it is on 65, 75%, 70%, 65 to 70%. There may be a overbought area or oversold area. So I have to exit from the market, sir, because market will tend to go down. Okay. First thing, okay, when the RSI is at 75%, it's not a selling area. So it is an area of strong resistance is getting formed. Okay. If that resistance is broke, you cannot stop the share at 75%. It will not come down. It will move very, very, very crazy. Okay. So that means that whatever we are taught, see, basically psychology market is taught differently by everyone. There are so much of books are available. Everything comes with fear, greed, your stop loss, your acceptance, your things, all yours, 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 yours. So, if we address ourselves into our shoes and see what is the factor that is really stopping you, first thing is write it down. What are the factors that it is stopping you in gaining in the market? First thing, early loss. I lost in the market for last 6 months. I lost something, such and such thing. Write it down. Second, are you running out of your steam? That means that are you lost your stuff, or you lost your life because of the loss that you had? Write it down. Are you spending time with your family? Write it down. What else I can do? Whether I can, how I have to do for improvement on my trading, whether my friends are, whether my friend will accept me as I am a failure in the market. Write it down, that too. And what do you think about society will tell me if I'm doing losses and losses and losses in the market? What will my society will do? Write it down, that too. Everything. What are the negative factor that you really have in you? Write it down, all the stuff first, and then one by one you strike it off. What is their use of you in trading? Whether they are the one who is accepting, who is making your trade bad, remove it from them. Remove it. If you're having a problem with with your wife, that I'm doing excess trading and my wife is coming and beating me, and my husband is coming and beating me because I made so much of losses, tell him that I need a space. If I want to make some money, I need some space. Give me some space for me. Give me a space for me to prove. I need some money. I need to do something. Whatever I lost, I will be recovering it. But don't pressurize me. If a person is being pressurized, whatever he is capable, he will not do. Take an instance, you are an IT company or you are in any other company. Okay, you have to deliver your project in 6 months, right? And or let's say you have to deliver the project in 1 month. 1 month you need to deliver a project. And your boss is telling you, I need this project by 1 month. And if he asks you on a daily basis, what are you doing? How the modules are going? Is there anything that you did? Show me, show me, show me, show me, show me. And he asks for all 20 days. How the quality of the work that you do? Whether the quality of the work that you did will be 100%? No, you cannot make a very quality project. You cannot do it because there is a person who is managing you, who is taking control over you. If someone is controlling you, you will not be in a mindset of doing good. What in turns it does? It in turns brings you failure. So you should tell your boss that, boss, you are asking me to do a project on for 1 month. Don't ask me on a daily basis. I'll give you a timeline like every 15 days or 20. Let's, if this is a 1 month project, let me have 1 week's of time. Every 1 week, I'll give you the status on that. And then you take a, if I have any help needed, then I'll come back to you. Until then, please do not disturb. And if that person accept your things, and then if he's respecting you, and then if he allows you to do it, then you will execute the project and you will deliver the project in 1 month. Same thing here. If your wife is asking you on a daily basis, how much is your wife or husband, sorry, if your wife or husband is asking you how much you made profit today, every day you're making loss, please come out of this company, come out of this mess. I don't want you to trade. And you want to trade and you want to earn money. Only thing is you need some peacefulness. You can straight away tell your spouse that I need some space. I need some space to trade. If I want to trade, then only I need a space so that I can make money out of it. But if you keep on asking me how much you earned today, how much you lost today, how much you lost today, how much you lost today, it'll do not good to you and not for the family too. So that much of clarity that you need to bring it up to your family first. Your family should accept your failures. And if they accept your failures and if they backing up very well, then everything is good. So once everything is good, you are in the right track. When you are in the right track, then everything out of the market is all is all in your feet. It's just execution factor is missing. Okay, so first thing is write it down. What are the factors that is affecting your trading? Write it down first. Try to address those things first, and then start the trading. You will succeed a lot. Okay, so it is not the same thing for everyone. So it is for you, right? Now it is for you. I said a psychology, right? So if I do a psychology on me myself first, and I analyze and I see that I'm not fear of anything, I'm good, I have so much of support from everyone, I have excess money, I can do some kind of a trade, then comes the psychology of other persons. So why I need a psychology of other person? So in this case, I'm going to deal about the psychology of the institutional players and not the psychology of the current players, the retail players, because all the retailers will always take their money out whenever they get 2 rupees, 3 rupees out. So that's a different issue. But the factors are here are the institutional players. They don't sit with one rupee, 2 rupees profit. They look out for 1%, 2% profits. They don't look out for 1 rupee, 2 rupees profit. See how the trading does is they, if they will have a baseline, like they have a baseline for every kind of a trade. So they will be looking out for a trade. So sir, how can I take a trade from the range of the market? I don't know how the range of the market does, but range of the market is the psychology of the market. Okay, I'll explain you how this things works out. Okay, let me bring up the psychology of the range of the market. This is the range of the market, right, which I developed, right? Okay, range of the market I developed, so I don't want to mess up here. So we have these two lines, right? So this is like a psychology line of the institutional player, this one and this one, the upper part and the lower part, and then second lower part and the second lower part here, higher part. So what is this thing says here is, this one is the psychology factor of a particular institutional players will tend to book their profit around this area. They will not be looking out for any more profits. they will be tending to book their profits. So that is the psychology factor attached to these two lines. So, sir, if it comes to around this area, what should I do? As per the psychology factor of the institutional players, they will be exiting their shots. They'll be coming for buying at the level. They'll be covering their shots because their psychology factor is telling them to cover their shots. If the psychology is telling them to cover their shots, what you should be in a position to do? I should take it on the positive front. I have to go for long in the particular sign, right? I should be in the long in the market because his psychology factor is saying that to cover the shots so that they will be happy. For me, I know your fear factor around this area. You are having fear around this area. If you are fear, then I am your God. I'll buy there. If I buy it on this area, so think first time if you say they are fearing, it's a fear. Second time if they say if they're fearing, they are not fearing. So anytime when it's the first time, it's a fear, and then they will be covering their shots. Second time, they will not be fearing because they had another entry at the another area. So first time when it comes in it's this area, you can cover your shots or you can buy a new position around this area. Okay, let's go up and then it comes down. This is the final fear factor for the particular institutional players, right? When it comes down to this area, they will be covering the shots. They will be covering the shots. First time when it comes and it's here, just close your eyes and buy it. Because their factor and their execution and their thing, everything ends around this area. If it wants to go further down, how this things works out is here is okay. When it comes down, it's this area. It will tend to cover at least to this area and then it will come down and then it will break this level and it will be going down. So this is their fear factor level. This is their second fear factor level. So when this factors everything is covered, okay, then the next part of covering their shots will be at this level. So that is why these levels are so important. These are not of something like just like pivot levels or something. It purely on the psychology factor. It is done with psychology factor. What is psychology? How much money that they will be spending, how much money that they will be covering, everything is calculated and then only we found this levels. It is not that easy to find it. So that's why this range of the market is so clear that it will hit that level and it will reverse. How many times you have seen it, right? You've seen it. Year goes down, first time hits, recover. Second time, then it comes down. First time hits, sell. Second time hits, it goes down, settles here. First time will always reverse from the level because they will be covering it. First time it's here, it's this level, goes up, comes down, up, and then comes down. Okay, you just see this is all it goes up. It could not even sustain here. It comes down, it's this level, finished off. Because they don't want to see further down. They ends up here. So that is what is all about their feed factor for the particular day. They have the levels. They have the levels cleared. They have this level for life. You know, they have this for life. They do it. They do it then and there. They don't have it. They don't keep it for 5% up or 6% up on a single day. If they want to do it, they do it differently. That is a different factor. But if you want to have a beautiful trade, right? Even though if someone gives you a buy here, even my bot is telling you to buy here, it has a target of only this much. It'll ask you to sell around this area. But if it's this level also, you can sell it. That's why you have this range of the market with you handy. I also taught you, right, how to work with the range of the market. So when you think that as a see, mostly all the things are all of your psychology, how you are dealing with the psychology. See, all the indicators will give you an heads up. Okay, it will give you an heads up. Here it is telling you to sell, but your mind will not allow you to sell. The indicator will tell you to sell here, buy here, and your indicator will not allow you to buy. If that is the case, then you have a serious problem with your psychology. So now tell me, how many people out here have this problem? Even though the market is telling me to buy, I could not buy, sir. How many people say here? Yeah. Okay. So this happens to everyone. It's not that easy to identify where the problem is. We have this problem. We have this problem in ourselves for every long time. When someone says that you can do it, you have a dilemma whether I can do it. It happened, these things happen when you are in child itself. When someone tell you you are good, you are very good, you can do it. But if you had a feeling that whether I can do it, if you had that feeling, then you need to remove that feeling from your fear factor. That means that fearness, that you know, the inner ability that you have, the potential you have, that potential you should bring it forward. If you bring it forward, then your way of trading will be much more clarity will be available. Okay. Yeah. You have, yeah, your self belief and your self confidence should be there. There are so many things are here. Okay, we have so many factors have been here. These two levels which I marked here, it's a completely on a psychology factor at all. So I'll tell you now, it's all about psychology of the institutional players. That's why these two lines are so working good. Okay, so this is what everyone should know. One second. Okay. 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 Sorry, AI disturbances here. Sorry for that. Okay. So we should have our, you should follow blindly your mind. You should control over your mind. You should control over your inner consciousness, your conscience, right? Your what is that? What they tell you? Inner conscious, the one which says tells you to go and not to go, right? You have your inner will always tell you, please do not go. It will go down. And your mind says, go. And your inner conscious says, it'll go and it's a stop loss. Why are you holding it? And your mind says, okay, let's wait for some more time and see whether it's hitting the stop loss. Okay, it is a stop loss. Okay, but I didn't come out. Let me see whether it goes down or whether it comes up. That means that you're fighting with your inner conscious. In fact, your human body is reacting or fighting with yourself, who is the superior, whether your mind or your inner conscious. When you are controlling your mind and you listen to your inner voice, everything should work good. And your other inner voice should not should always be a greedy one. So don't get into that kind of a feeling that, okay, hey, why are you buying 5 lot? Buy 20 lots, buy 100 lots. You will get more money into it. Oh man, I should have bought 100 lots here. I know that this will go up. I should have bought 100 lots. No, no, no. It's not that case. You should always believe in yourself, but not with IR factor. Okay. Let's say a beautiful example. Okay, so we bought a Nifty, Bank Nifty or Nifty. Okay, we buy something on Bank Nifty or Nifty, and we have a target of 150 rupees. Let's say we have a target of 150 rupees, and then you bought one lot. You bought one lot. Which rate you will book the profit? I want answers because I'm only talking all the way. I want answers. If you have one lot, where you will be booking 150 points or less than that. Okay, so you have two lots. You have two lots. You have two lots, and the target is 150 rupees. And where will you book? Same 30-40 points. Okay, you have 100 lots. You have 100 lots. And what rate that you'll be booking? So basically, when it's one lot, the guy tends to run it to believe that it is hitting 150 points. But when the person is increasing his slots, what comes attached to their trading? So you have the answer with you. So even though if it goes in its 150 points, even though it goes in 150 points, you tends to book it 5 rupees, 10 rupees. Even though, because you cannot have a stop loss of 5 rupees, 10 rupees for Bank Nifty or Nifty, because it comes down, hits your stop loss pretty badly. Think of 100 lots. 25 into 100 lots is nothing but how much? One lot is 25, 10 lots is 250, 100 lots is 2500. So if it goes 10 rupees down, how much you are losing? 25,000 rupees. So same thing on the upside. If you get 25,000 rupees, the guy will exit. Right or wrong? So you will not be waiting for 150 points. But getting that 150 points right, getting that 10 points right, he'll be sweating a lot. He will lose his patience. He will bite his nails like anything. He cannot sit. He will completely lose his mind. Right or wrong? He cannot do his trading. He cannot sit for a while. Always his mind will say that come out, come out, come out. Right. So better follow your risk appetite. Better follow your own appetite. If you can eat only two breads, have only two breads. There are so much of things are available. I have seen, okay, there are so much of things available in my plate. I can take all the things in my plate. Then I can eat everything at my single point of time. Whether you will eat everything. Let's say there is one more factor, yeah. One more factor here. It's okay. You have so much of money. Let's say you have so much of money in you. So let's say you have around 1 lakh rupees or 2 lakh rupees, and you want to buy everything like all in MIS. I want to buy everything in MIS, so that even if I so they gave you 20%, 20 times of your money. So let me go and buy all the stuff. Okay, Bank Nifty is going. And to buy all the Bank Nifty shares like Axis Bank, everything. I'll buy it all together. Okay, and finally someone tells something and you find a very big loss in your banking scripts. That means that you should have taken only one bread, but you have taken all the breads and you could not digest. The fear factor here is the market is tends to comes down. That means that you cannot eat. You cannot able to eat. You cannot able to eat means in the sense is you cannot able to put the stop loss in the market. What will happen? All the breads that you have taken will be going to the dustbin. Same thing, you are missing your stop loss. What will happen? All the shares that you had will all tends to go down. And what happens? Unnecessarily, you're going to pay the money because of overeating, over trading, over everything is. If you say over means over, everything is over. Control yourself first. You should have your control over yourself. If you control yourself, you can control everything. What is your control? Self control. Sir, I have very good control over me, sir. I take only one lot. I take only one lot, sir. And I took a trade. And I'll look for the target, sir. And if it's a target, then only I exit, sir. If it's not hitting my target, I will not exit, sir. Because I have so much of patience in that choice. Come on. Why are you so attached to that particular share? I don't know. Why is the company is giving you money for something? Is the company is giving you anything out of their control? No. See, basically, share market is whatever you're putting money into the market, right, to under particular script, okay, they will not be returning your money. As long as the company is giving you, the company is earning for profit, they will tend to share something to you. But if the company goes down, whether you will be paid, whether the company is liable to pay you the amount of money that you invested, you will go to the company and you will shout. But whether the company is liable to pay you such and such amount of money to you, your trust, your thing added with the company, but that company doesn't have any trust. But why are you taking the trade and so attached to that company, and then you're taking the trade and you're waiting for the target, and someone is telling me, it's shocking also to hear, sir, I'll buy it for life. Okay, you buy it for life. Okay, so what is a big problem in that? Sir, whatever happens, sir, I'll be holding, sir. Whatever happens, you'll be holding? Definitely, sir. Whatever happens, I'll be holding this company forever. Okay. How this is possible? This is possible because his mindset, his psychology, is whatever the inner factor is all attached to that particular company alone. It may be a scenario that that company would have given him a very good profit earlier. That's the only company it would have given him profit, or that company would have given him very good dividends, or that company would have given him very good share splitting of shares, or whether that company would not even given him that much of losses. Yeah, see, these are things all happened when at the time of Satyam, the Satyam scandal came in, right? That time there were only three companies were very much on the top list. One was Infi, second one was TCS, and third one was Satyam. And people tends to put a lot of money in Satyam. And if you're a Satyam employee, you get Satyam shares as your bonuses. And my friend was having Satyam shares, all shares, Satyam. And he was telling me in 2007 to 6 7, I will not be selling any of the Satyam shares because Satyam will grow like anything and I want to hold it for life. Okay. He was having around, you will not believe, he was having around 5,000 shares of Satyam. That time it was around 820 rupees. And he was very happy that that company would have given him very good shares. When I told him there is something is happening in Satyam, da, please exit. No, da, this will not happen anything onto my company. So I am working in the same company. I know about the company, how this things works out. And and also the worst part is he is working in the company and he cannot sell the shares without the getting the consent of the company. Okay. But I'm telling him there is something is wrong with your company because it is from 800, it has gone to 600 and it has gone to 500. If something is really happening, you need to look out for your shares and you have to come out. And after it is hitting 300 rupees, he tend to believe me what I'm trying to say. Please exit. I was telling him, I was warning him, like left and right, I was warning him, but he was not listening because his inner mindset is saying that you are working in the same company, nothing will happen. If someone is telling you, don't believe, maybe you should analyze further and see whether I'm telling it correctly or someone is telling it correctly. You should analyze it. But your inner conscious saying nothing will happen because I'm also working in the same company. Nothing will happen. Everything is going smooth. What is going to wrong? Maybe I should buy more. And after eating 300, it straight away came down to 198 rupees. I still told him, please exit. And that's where Ramalingam Raju was taken out. And after Ramalingam Raju was arrested, share from 198, it came down to what? It came down to 65 rupees, 70 rupees. And the day ended. And next day it opened around open it was around opened around 5 rupees. Okay. So what happened to this 5,000 shares? Gone. Same thing. If same thing, you should not be attached with any of your scripts. Okay. And make sure that you have your strong fundamental analysis on any particular scripts that you hold. Think of whether think you have to watch if you are buying anything on positional, if you're buying anything on a particular company and you're holding it for life, then you need to watch their movement every 3 months. What is the book value is, what is the assets that they own, how much liability they have, how much borrowing that they have, how much positive they are, how much they are spending in the accessories, how much they just spend on the bonuses, how much they paid to the clients, how much they paid as a tax, how much they have done as a company the last 6 months, whether their capital liability is keep on increasing, whether their capital is increasing. All the stuff you need to understand before you hold any particular shares. These are all psychology, guys. These are all psychology that you need to have. Do not have a blind mindset saying that I want to hold the share forever. Don't ever tell to anyone that I'm going to hold the share forever. Okay? Don't. Please, please, please. Please remove it from your mind. Whatever share that you buy, if you get 20%, 30% out of it, just come out. And then if it comes down, buy it again, sell it, and don't be attached to any kind of a company. This is first rule. Second rule is, if you are trading in a stock market, right? All you have to do here is go to your last 1 year or last 2 years. Look out for all the shares. Which are the shares that you trade a lot? What are the shares that you traded last 2 years or all? And take it down to the right hand side. Which are the shares that you gave profits and which are the shares which did not give you profits? Remove all those scripts which has given you profits, sorry, negative losses. Remove all the scripts from your watch list. Have only the script which has given you positive. Okay, have them alone in your watch list and then start trading it. If you think that I'm an idiot in saying about the psychology, the to the script, right? How can a technical analyst says that please avoid what are the script that you have on loss removed from your watch list, have only the positive things, right? That is also psychology, brother. Why? Because whenever I take that company, it doesn't give me a profit. It always give me a loss. If you have that mindset and if you trade on that particular company, will you get loss or you get profit? Tell me frankly. You are entering into a company and you know that I entered into a company which always give me loss. If I enter into the company, will I get loss or profit? No, no answers. Not able to think. Maybe I'm bored in talking. I'm boring. Because when you think that a share will give you loss and you enter into the stock market on the particular stock, you will always end up in losses. But you already found which of the stocks will give you profits, and you enter into the particular stock with a positive mindset that this will always give me profit, then you'll always end up in profits. Right or wrong? Right. So same thing. If you ask me in my lifetime which are the shares that I don't want to trade, one thing I will tell you is one thing which I tell you is I never ever in my life I'll touch IndusInd Bank. Second stock, the never ever stock which I touch is second one is Sun Pharma, and the third one which I never ever touch in my life is LNT. Not LNT Infotech or LNT LNT ETS. LNT. These three scripts I'll never ever touch in my life at all, because when I touch LNT, even though the technical things and everything gives me a positive trend, my mindset is always on the negative trend. So it will not allow me to settle on the positive at all. So I don't even touch LNT. Same thing. IndusInd Bank. I'll tell you a scenario. IndusInd Bank. IndusInd Bank was going like crazy. 1,800 rupees was going. Okay. I thought okay uh this will Monday is going to gap down, man. I told during my class it will open gap down. Okay. Nifty opens gap down and also Bank Nifty opens gap down. Okay. So and also told you where exactly it will open. Okay, I don't want to teach that because this is for psychology class. So I don't want to teach that. So what I did is I bought IndusInd Bank at 1,800. It was not even going to go down. You know, after 1,800, I bought under shares who hold it for positional. Okay, some 1,800. As long as I was holding it right, it was coming down, 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 and down. Even though my levels were telling it will be reversing from somewhere, it was not reversing. And finally it broke all the levels, and the final level was 980 or 970 was the level. I had a odd stop at 970. I have to give it because already 50% of money is washed out in just 40 or 30 days. 30 days 50% of money is washed off in IndusInd Bank. And after exiting at 970 and 980, it was backed up to 1200. Okay. Okay, again it went down. So again I bought it 1200. So that it was on a breakout. Again it came down, 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 down to 800. Again I have to exit and again it went up. And after that I came to know it. It's not my share. It is not my food. So these are all happened around 2017, 16, 17, I think so. Exactly. I don't remember. Maybe if I remember IndusInd Bank. It was falling from 1800 levels onwards. Yep, yep, yeah. Okay. I'll remove everything. You see here, it was around this area. It was came down here. Okay. And then it came down to 1300. Again, I left it. I sold it here. Again, it went up to somewhere around here. Again, I bought, and somewhere around here. Again, I bought it around here. It was falling, 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 and it went down to 200 rupees. But I exited somewhere around here, 951. This is where I exited. I had the marking here, somewhere around here. This is where I exited. Okay, so I do believe, if your stars are bright in particular shares, if your stars are bright in particular shares, why not you buy those things and keep it? Because it will give you a positive vibes. When you have a positive vibes, your trades will be very much positive. Okay, there are so much things that you need to follow here. Okay, there are, let's say, you have people are talking about Nifty and Bank Nifty only. Let me tell you, Bank Nifty and Nifty alone, there are so many things are happening, but people are asking me the craziest stuff. Okay, I don't want to do it here. Okay, hey, where is that? I want to see something here. Okay, yep. Okay, so let's talk something on the market front, because people are, when you see or talk about the marketing psychology factors, right? People will not able to correlate, between what I'm talking and with the psychology factor. Okay, let's talk about in the marketing front so that people will understand better. Okay, let's talk about Nifty here. Okay, Nifty is this, right? Nifty is this. Okay, Nifty is this, and we have the levels already marked somewhere around here, and this is the level. It will come for a support level. So tomorrow, if it comes, it will take the support from this level. So what is this level is all about, right? So these are the levels are called psychological levels. Why psychological levels? These are levels are why these levels are called psychological levels, because those are the areas where people had a mindset that when we buy it here, I will not end up in loss. So when I see that the area which I'm planning to buy, and that area seems to be a very good area of support, and that's where it's called a psychological support. And when you mark some levels, let's say I teach you about the Fibonacci levels, right? Let's say I'm taking something on the Fibonacci levels, and I'm marking those levels, like this levels or this levels. When I mark it, right? So when I mark those levels are a psychological levels. It's not the level of reversal. It's level of psychological level of the factor, the fear factor of the institutional players. When we take them as their your no, you need to have your enemy, right? You need to have your enemy and the front. You want to attack your enemy. Who is your enemy in the market? All your institutional players are your enemies. Okay, if you want to attack the enemies, you should be strongly built up. what are the strongly built up character that you have? The marking of the levels. You need to have a level of marking to play along with the, or you fight along with the institutional players. If you're not able to fight against the institutional players, then you don't have an ability to withstand in the market, right? So there is a thing which we already talked about, the levels which I already talked about with the range of market, right? There is one more variant which I introduced, was on race. Do you remember race, right? The race also a concept which I developed, right? So in this race, right, if you see this, so in this case, there is a possibility of reversal. Same thing, the concept are same, but the reversal factors also the same. You know, you draw it horizontally and you draw vertically, you draw a trend line, everything is same. But the factor in the race is much more accurate. I'll tell you a factor here. Okay. The factor here is whenever whenever there is a lines, the rays intersect. Let's say there's an intersection of the rays. Let's say this intersection of the rays, this particular area alone, it will tend to pull it towards his side. This is a psychological factor. Sir, repeat it. Sir, what are you saying? Yes, there is a factor. Whenever there is a rays intersect, if the market is on the lower side, it will tend to pull it towards this side at the midpoint. Okay, there is a midpoint here. So after hitting this area, and then it will tend to cool down a bit. And after that, after getting it pulled, it will reverse back to the same level. So this level, see this level, this level is an intersection. There is one more intersection here, right? Let's all mark the intersection levels here. There is an intersection level here, right? So I said at the intersection level, it tends to pull it. So here it tends to pull it. And after that, the cooling factor came in, it came down. Sir, here is the intersection, sir. Why not it is not pulling? Here is also intersection, sir. Why it is not pulled here? There was a pull happened here. And then again, it was moving down. The small pull happened here. See this green here. And after that, the selling started. And that's where the selling ended. This is a psychological factor. Let's say one more thing. There are there are, let's say there is a, it is going down, this area is going down. Okay, this area is going down, but there is a x factor here. This area, there is a x factor here, it tend to pull up around the same area. This is a psychological factor. Okay, here same here, this area, say this is also a pulling area, this area, same thing here, it pulled from nowhere, it was on down here. Due to that pulling, it pulled. Okay, so you should see lines versus lines, the same red line versus red. There should be a crossover. It is not cell connectly. It is on this factor, how the factor, fear factor comes into play. It's all mathematics here. So So in this front, right, these are the factors that makes you crazy. Sir, there is one more here, sir. Whether how this reacted, sir? Again, there is a movement happened. After that, selling happened. Okay, sir, there is a intersection here, sir. There is an intersection around this area, sir. What will happen? It definitely it will bounce back here in this area. Somewhere around this area, it will open around this area. Let's say how this market will open on the tomorrow will be it will open around this area. It gets support from this ray, and then this area, exactly on this area, it will tend to move up, and then it will come down, and then it will get a support from this area, and then it will move up. Where it will move up? This line, this area, again it will tend to move up. Again, after that, it'll tend to move down, and then it takes a support from here, and then it moves up, and then it takes a support from this, and then it may struggle here. Okay, so we are not going to talk about that, Nasima. So just if you see that it's a new kind of a strategy which I built. Okay, it's not with particular thing. It's a completely a new strategy which I'm developing. It's not the ray 1, ray 2, or ray 3. It's completely a new ray 4 method which I'm developing. It's not with the whoever have learned with me on first 1, 2, 3 rays. This is the fourth ray which I've developed. Okay, so it's not yet in the market, but I am giving it in the indicator. So in this indicator, if you see there is a piercing equal to OK, if you do piercing equal to OK, it will take the first ray concept. It has so much of lines. Okay, it has so much of lines, and it will be hard to trade. It has so much of lines, but when it says that piercing is okay, then there is a particular pattern is formed. Okay, so this is the advance that I made on the arrays. So how the rays works is all these dotted rays are also array. So only thing which I want to differentiate is I want some kind of a differentiation in the rays. That's why a dotted rays are created. But there is a thing here is the dotted rays are the intermediate rays. So those rays will be the intermediate support rays. So that means that when it comes and it's this rays, we have a support from this area. So these are all psychological levels. Whenever it's this rays, it has to the candle should be entirely down or entirely on the upside. Then only we can take a trade. You cannot take a trade if it's on the upside or the downside. Okay, if you say that there is a trade around this area, we may get into a trouble here, but think of a trade where it has a very big area to cover, and don't take a trade which is very very nearer. That is the only clue that you should follow. But if you also follow the race, it will also tells you where the next level of support will be. So in this race, right, in this race, it didn't given you this particular level of support, this level of support with the race. But if you see with the older race, it would have given you the support levels. Maybe the support levels here around this area. Maybe it is not showing. Maybe they would have created. See, there's two lines are there. One, two lines are there. It is stating the support from this line, the below line here. But this line would not have been in the piercing line. That line is not there. Okay, because I don't need that line. That's why I removed it. Okay, so these are also your psychological levels which you can also follow. Okay, see, another one more thing here is, okay, let's talk one more stuff here, because people are here. We'll discuss further on the race. So whenever there is a possibility of moving on the IS side, right? Let's say these are the IS side, right? So this level will act like a resistance. It cannot move on the IS side. So this is where the levels of resistance will be. Okay, you cannot have it then and there. See the levels here. See the levels here. It is taking somewhere here, and then it is giving a rejection around this area. But there is a support around this area, little bit of support. Okay, so these are extreme levels. These and this are extreme levels, and these are intermediate levels. But this ray, it formed from the previous days. So we have a level here, we have a level around this level. So this is where this is like a geometry kind of a stuff, but it gives you a beautiful results. Okay, along with the range of the market, this one also helps you in very good trade. Let me say how this works out. So this is the range of the market, right? So the range of the market, so range of the market is this, and then we have the race covered. So after this range is broken, we have a support around this level, right? But after hitting nearby the area, it tends to move up, and then again it got support from this area. It fall from here, and then see the race. It was supporting all along. It was taking the support all along, and after that it got broke, and then there was a fall happened. Here after that there was no race here. There was no race around this area, so it came down, and then it came all the way here, took the support, but it came down and took the support from the race. Again it went up, again it came down, it broke the ray, it came around this ray. So you have to see like that. And if you see the ray right here, let's say I'm taking the ray around this area, so day is formed, it is falling down, but it took the support from the ray, but this ray avoided my entry automatically, asking me to exit from this area. So it came down, it took the support from this area, moved up, it came down. Let's say it moved up, it took support resistance from the ray, it came down. These are all previous rays. How beautifully it's a race. So these are all the psychology that you have. You cannot have one single level of trading. There may be various factors attached to a particular kind of a trade. So if I follow only the lower part, I miss this part, right? I'll miss this entire part on the higher side. I may miss the entire part on the lower side. This one I would have missed it. This moment I would have missed it because I did not have the lower entry, right? There are so much things that are available, guys. This is a one part that I'm going to impart. So where the levels and the tools that I'm making is all of institution level. So you don't need to worry about anything. They don't think of anything on the retailers aspect. It's all psychology in the market, where the level of the psychological level of institutional players will be, where they tend to book their profit, where they tend to exit from the market, where they tend to buy from the market. Everything is there in the script. So if let me say I'm giving you a buying option in Bank Nifty, I may give you a target of somewhere around 35,900. But will you hold for 35,900 when the race is hitting around this area? No, you should not hold. You should exit. Because in the meantime, when I was studying, right, when I do studies, right, I tend to I tend to close like this. I do manually I don't use indicators. I do manually, and I'll do the the study. And I know that there will be a movement till here. But this day it did not move. The next day it moved, right? Because I'll be targeting only this. But if you think that Prem sir has given me a target of 35,900, but it came down. So my target is this, because when my calculation are done, my target is this. But on this particular day, the race is giving me a level that, sorry, it will not go up, or then you have to exit. So this is called psychology. You are not accepting the call from a person who you think that he is a superior in the market. If the psychology of the institutional players is saying sell, you have to sell. And if you tell me, sir, the race were hitting, sir, so I sold it, I'll be the happiest person to say sell it. Right or wrong? I know how many people have told me that, sir, the race is hitting, so I have to exit. No one, except one. I had one person was telling me, sir, it hit the race, so I exited. I'll be the happiest person. And that person only is making very good money. Even if I give a call, that fellow will follow the race concept pretty badly. And if I say it'll go and hit this area, he say no, it will not hit that area. He's challenging me. I like challenges. I like challenges. And when someone is questioning the move and with my own invention, what else you need, guys? Tell me. If someone is telling you, sir, you taught us something, and you are giving me a target, but the rays are coming and hitting me, sir, I will not buy, sir. Good, don't buy it. I'll be the happiest person, because you're following me blindly, guys. Thank you so much. And you're respecting my studies, and I have to respect you. Okay, so there are some more to the psychology which I need to conclude. All strategy that you have studied in the market is all good, but why you cannot able to make money? Because our mind is not attached to that particular strategy. If I'm attached to that particular strategy, that means that whatever I do, I tend to believe in that strategy, and I'll put money into that strategy, and I gain from the strategy. But what others will do, what we do, we have one strategy now. Okay, this is going good. Let's learn some more topic, some more strategy, and then we do that strategy, and that will not work out. And then we do another strategy, and then we do another strategy, and then when we see someone showing you 550 crores, 70 crores in one single day, 2 days, 3 days, then you forget everything, whatever strategy that you learned, and you will run behind that fellow strategy, and that will be entirely useless stuff. Maybe it's maybe useful stuff, but he may have a capital of something around 200 crores, 300 crores. Do you have that much of money into it? We are from a poor family. We are from a family where we are middle class family. So if we are in the middle class family, we should tend to react as a middle class family first, and then gain money out of it, and then try to become a rich person. Slowly build your own strategy. Whatever strategy that you learned, master in that. If you master it in that particular strategy, your mind will accept that strategy, and it will accept whatever the mistake that you do. It will also tell you to exit at the particular time. If you're not following any strategy, then the fear factor will be attached to your entire trading. You got my point? So till now I was talking only to address this. If you have a strategy, and if you know that strategy works very well for you, follow that strategy. I'm not promoting my stuff. If you're following any strategy that you really think that it's a thing for you, that it can earn money for you, take that strategy, work on that strategy alone. Work for 1 year. Don't sit like that 1 month time. Tried, sir, it doesn't work. Don't even. So there should not be failure here. Any stuff that you work for a longer period. If you work for a longer period, then only you will come to know the fruit of it. You cannot you sow a seed and you cannot get it right away, mangoes, and next day. For mangoes, if you sow a seed, you have to wait for 4 years, 5 years. And after 4 years, 5 years only, you'll get many mangoes. Right? Same thing with coconut. You cannot put coconut into the ground and you cannot see tender coconut in another 2 years, 3 years down the line. No, you get only after 3 years. That too in small. And then when it goes big, you will get more. Do whatever thing, whatever you do, back testing and all. It's like doing for a in a single day you do back testing for an entire year. No, I'm not asking you to do that. Practice. You cannot back test and see that strategy is good or not. All you have to do is you have to be with the market with the same strategy for a year. You need to run it for a year. You have to gain confidence over that strategy. When you once you gain the strategy out of it, once you gain confidence of it, everything will come to your plate, and there will not be any kind of a nonsense kind of a trade. You will like your trade. Everyone wants to like the trade, right? Whenever someone, when we learn something, when you implement something, and when you take a trade on that, and then you get a profit out of it, then you will be happiest person, nah? It's all my trade. I did it on my own. I took it and I had a profit of 4,000 rupees, 5,000 rupees. It was my first beautiful trade. Will you remember that, right? Everyone remembers that. And when you have confidence on your trade, then you will learn a lot of it. You will deep into it. See, when you are so happy with a particular strategy, you tend to innovate on that strategy. Your mind will work furthermore. You are giving your mindset that I'm going to work on this strategy and I want to gain more out of this strategy. Your mind will accept that, and it will tell you some more tips for your trades. Your mind will automatically helps you, guys. Really, that's the psychology of your mind. If you're still not accepting it, let's say you practice to do, let's say you know to drive the car, you don't you first thing you don't know to drive a car, and after 6 months you got driving a car, you started driving the car. Okay, and you are in the car and you are driving. After some time you drive the car. Okay, you will not be concentrating on the wheel. You may be concentrating on the wheel, on the road, but your mind will be driving the vehicle. Sometimes you will be absent minded, you'll be talking something, your mind will be working on the script, on the stream. Do you remember that? You'll be driving without your intention, you reach the place, you get in the car, you reach the place safely. Same thing, when you have a confident on your particular strategy, and if you keep on working on the strategy in and out, it's not like strategy you're building a strategy, when to buy, when to sell, when is your stop loss, how much is the X factor is, how much amount of money that I have to invest, how much is the lot that I have to buy, whether I have to buy 100 lot or 200 lot or 300 lot or 500 lot or 1000 lots. All this stuff you need to practice a lot. Once you all practice all this stuff, right, everything is on your feet, yeah, everything will be in your feet. There is no way of stopping, there is no way of stopping you, and you will be a person in the whole world that people will be looking at you as different. Right or wrong? Okay, with that final note, I'll say have one strategy, follow one strategy, and execute one strategy, and then end up with one kind of a strategy which is called profit. Okay, and second thing which I want to say is, first thing is you need to see before getting into the stuff, you need to think yourself as a bad trader or a bull trader. I've been telling it to all my students. First thing that you need to think of you is whether you are a bull trader, whether you're a bad trader. If you are a bull trader, you have to wait for your market to come to your place for taking a trade. Same thing, if you are a bad trader, you have to wait for the market to come to your place for selling. You cannot have both the trades simultaneously on a particular script for a day. You cannot have that. If you have that mindset, please remove it. Please start working on one particular strategy, one particular way of working, one particular way of taking the money out. It is not two way in taking the money out. Buying call, buying put, taking the money out is not the trend. You should buy one sided, you should be one sided. That means that your confidence level is on one sided, and then you take the trade, execute the trade, take the profit out, and then happily sit, finish off your trade, take another trade which is on the same track, same logic, same thing, take the profit out. Do that, you will succeed a lot from the market. Hope this session clears something on the psychology aspect. There are so much to cover, but I didn't cover everything, but at least a particular part which I want to cover on building your own strategy, which I covered. Hope at least I gave something to the market, to the people, to my students, or to my followers. Hope you had a great day with me. Okay. Chalo, have a great weekend, guys. And tomorrow we have to start another new day. And let's see how this thing works out. Okay. Bye bye. Take care, everyone. Bye bye.